Hi friends, welcome back. Look at the rank drawings left on the chart yesterday. That's fun. So yes, what are we talking about in yesterday's video? Well, we certainly mentioned how we could have gone back down to 200. I'm sure we did. We must have done. And what's happened to the prices? Well, they went down to 200. I saw that earlier on as I was looking at the prices on my mobile telephone. They went back up to like 210, did they not? And then back down again. It's we're kind of oscillating around this. What's that look at? Yeah, 27. Okay, 208. We're in around this area here right now where we've dropped down underneath, and this is the 1 hour. Let's go to the 4 hour for some sort of. We've dropped down underneath the 50 simple moving average on the 4 hour time frame. We're below the 21 EMA on the 4 hour time frame. We're maybe going to be supported by the 55 EMA on the 4 hour time frame, but you know, it's not looking super fantastic. And what did we see the prices go all the way far down as? Well, let's just zoom right in here and see that we went, and the phrase close enough is close enough doesn't appeal to everybody. That's cool. There's the other phrase of leave a little bit on the table for the next guy. Whatever you want to think of it as, we got pretty close to this to this line in here where we'd said, you know, the prices could go down to 193. Well, the prices went down to 194, 195, pretty close, you know. And considering that that's a move from our recent highs up here of over 10%, that is significant opportunity to be trading. So, you know, doing well on that front for everybody who's been able to take advantage of that. But you know, questions need to be asked. Now let's go back out a bit here, zoom back out. This is a 24-hour time frame. We spoke quite a lot about how this could potentially be a sort of wedge or whatever, a channel or whatever. We talked about it a lot and how the differences between them and everything else. We've kind of gone on about that ad nauseum. And we spoke about things like how this can happen where you're trending up inside this, inside a wedge type shape, and then you kind of poke your head out the top. You talk about fake outs. You talk about people like go wild and say we've got this breakout, we're going to the moon, and in fact, you know, it just turns into a fake out. And we talk about this all the time on the channel, so like, subscribe, you know, tune in, you get this information every day. And then what's happened is we've dipped back into this formation. Now that's more bearish than it otherwise would have been. And if we go down here and then drop out of the way, then you know the likelihood of moves down to this or down to this as being just fake outs that we're going to turn around is diminished by the fact that we've had these fake outs towards the top side in the meantime, you know. And so that makes it more bearish. But anyway, we need to see prices like 193 hold overall. As soon as we see 193 break, then I expect we'll probably get a test of this 185 area or so. And if that were to break, then I'd say that we get a test of this 177 area or so, and then we've got the 200 and the 50 simple moving averages coming in there. Now, other things to be aware of in the near future are this is going to keep going up like that so long as the prices themselves maintain themselves above $106. So we know that the 50 simple is going to keep moving up for the foreseeable future unless the market completely and absolutely collapses, and we know that the 200 simple is going to more or less go sideways for the near future. You know, so what can we anticipate? Well, we can anticipate there'll be a golden cross at some point, perhaps over there towards the date of the halvening itself. That's maybe a little bit too eager, and maybe we see it happen around the 17th or the 20th of December. Tune in and watch of December. Whoa, May. Tune in and watch the Bitcoin video, and you'll see me talking about how on the CME charts how we'll not be, you know, how the potential for this to start curving up the way doesn't actually really kick in until the 17th or the 20th of May over there on the CME charts, and how there's a dynamic at play in and around the halvening happening and all that sort of stuff. So volatility could return to the market with a change in the fundamental nature of the industry as a whole. Anyway, these things could cross, and what have we seen every other time they've crossed almost in history is that you get a retest of at least one of the moving averages in the time after that they cross. And you can see it here. It's of no great surprise whenever I draw in and I give you these wee tick marks next to where we had these retests of those two things. So if we get across again, could we anticipate two things happening? One, the world going really bullish and everybody putting out these incredibly bullish statements about how there's this golden cross on the daily time frame and yada yada. And can we also then forgetting about this concept of a retest? And could we also think perhaps if it were to come up to either of these potential lines here, we could see retests in those areas. We can anticipate that as being a potential thing to happen. Sorry as I hit back the way there. And that's to be taken into account. Be aware of that. Now, It's really sunny here, and if you didn't watch the Bitcoin video, then you wouldn't have heard me yapping about how I need to keep this window open for the sake of, being a human being and alive and everything else. Despite the fact it's kind of ruining my video, but I need the vitamin D, so I hope you can see me. What have we got here on the daily time frame? We've got the 21 EMA coming in at this area of the 192. I want to remain bullish on this. I want to say this is just higher highs and higher lows. I want to take off that there and say, look, forget about patterns, forget about it. Let's just look towards the horizontals. We're above this area over here where we were consolidating before. That's great. We're retesting it as a sort of as support. We've got the 21 EMA below us here, and we need to go up, and we're going to start potentially getting targets towards our 250 area, where we have this 786 as a potential turnaround zone or profit taking line. And we also have this profit taking line in here at 230, and we can bust past both of them. And the great thing about that is that 230 is now from people who got in at those sort of 195 areas is actually a full 20% move up the way. At 10x, that's 200%. That's mental. So there's plenty of trading to be happening in those areas, and that's kind of constitutes a summary really overall. We're in this area right now consolidating. I'm not going to look for higher lows and lower highs and all that sort of jazz and whatever, and look at divergence or whatever between that area. We can look towards this and say that there's this upward slope here. We've got this here, this upward slope thing happening, and we've also got this upward slope on the lower side, and you can see that there's this sort of rising wedge in the stochastics, and you are able to do stuff like that. And you could also say the same thing over here on the RSI, and you could say it's a wedge of some sort like that, as I'm showing now. You could take it down like that if you want to get more touches on it. Or you could just say, you could take this line off and say that you've got this trend line, that this will be, So anyway, should we see this be respected and not broken down below now? Should it not go down now below that area? Then, that's cool. Maybe we'll see it go up and actually do those things we're talking about, getting supported at 193 and whatnot and going on up the way. That would be cool. For the bullish case scenario. Should it actually break, up above here, not go as high, say go as high as that, and then break down again, you'd have a head and shoulders on the RSI to be aware of. And should then, in fact, actually this line, as I get completely blinded by the sun. Yeah, it's like I'm a vampire. If this wedge were to break down, for instance, not that you're going to learn much about the actual prices from this, but like if you were to have this happen, then you could be looking down towards this neutral line here, and as we have, as we're in an overall uptrend at the minute, then you could say if the prices went down past the neutral line, that's actually where you could start considering them to be oversold at that point there, rather than down here in the oversold zone themselves. So you could get a measured move off the back of that, and then actually see the prices turn around there at that point there afterwards and continue towards the upside. And depending on how things all work out, maybe that would be in and around this cross of these things happening and the retest of those things and whatever else. That's what I'm looking out for at the meantime, and that. But just for now, all I can really say is that this phase here, that the price action is consolidating, and that there's, regardless of whether you want to have a leaning to one side or the other, it doesn't matter. It just might as well think of it as being 50-50 in terms of patterns, but whether you go up or down, at least, unless you want to be super expert about things. I get the impression most people watching the channel are fairly new to trading. Just think about it as being 50-50, and then what do we see? So we're consolidating just now, and we're yet to figure out where this is going to go on to. The potential for downside targets is there. We already identified this one. So if you got in there the previous, today or whatever, and you've come up here, you've already had the opportunity to take profit any time, even with a red candle for the day, you're still in profit. So well done to you if you're doing that sort of thing. I'm not a financial advisor, none of this financial advice, of course. But until we're past this phase here of this happening, then I'm not willing to say that anything overall specifically about the price action, all other than to say that if we did go up from here, that area there could be considered to be a higher low as part of this overall upward movement. And again, of course, then you could be coming up to here, and at that point the stochastics, just like on the Bitcoin video, would have to go up, as you can see here. If I just make this big, just so you can see, just so you know, in the face of what everybody's saying in the world, that has already went up to 93. We'd have to go up to areas where, if we look to the past, it's very rarely been up above. So this is the previous high. just draw this in for real quickness for people, and then I'm moving on to Chainlink. Thanks so much for tuning in. Share this video with a friend if you've got one that think would like it. All that. I'll just draw this into the previous high in stochastics. Look, you can see here, looking back the way, that for us to not be bearishly divergent on the stochastics, we would need to see the as the price action was going up higher than where it has been just recently. That's to say, as the price action were to go up past $230 and to achieve that horizontal move towards the upside and continue this upward trend of higher lows and higher and blah blah blah, break out of this formation, whether it's a channel or a wedge or your mother or your daughter or your granny or your sister, to quote trade spotting, then you know what you're looking at is a high. Will it be a bearishly divergent high, or will we be putting in like all-time highs on the stochastics? And if you look back to the last sorts of times when it was up so high before dropping down, then you're looking at our previous highs, and you know it's reasonable enough to think that you'd get a correction after having been so high. So that's the story. That's what we're looking at. We can absolutely have more positivity happen, but it has got a counterintuitive element to it in that either it's really positive, in which case it drops down, and or else it's not actually as positive as it should be, and we get bearish divergence, and then you could maybe look for it to drop down anyway off the back of that. That's what I would watch out for. The unsophisticated traders, non-professionals, people who just don't do this actually for a living, on Twitter and Facebook and YouTube and all the rest of it, we're probably not talking about that simple dynamic there. But if you want to do this for a living, then you need to be aware of these things happening and the counterintuitive nature of them, and wait until this sort of overall area is sort of kind of giving us a couple of indications about where it's actually going. Thanks very much for tuning in. I really appreciate it. I'm actually kind of bullish across the market in general in a really big macro sort of take a step back sense, but I'm aware that there's fundamental changes happening, and this event-based psychology kicks in, and you've got to be aware of these things at the time. Thanks so much for tuning in. Share this video with a friend if you've got one that you think would like it or benefit from it in some way. I try to do FOMO-free, greed-free technical analysis. I try to say, you know, we're in an uptrend, so you can respect that until the trend is your friend until the end of the trend. But all this bearish sort of talk has been highly useful in knowing targets for the downside in terms of today's and yesterday's trading, and for people looking to make decent profits and do this for trading for a living. So, you know, I hope that it fits in with your own technical analysis without causing any conflicts, and you can share this with a friend, because a friend of yours is a friend of mine. There's 560 Rocky Outcrop opticians in the world. We're all eagerly awaiting you joining us and subscribing up to the channel and becoming our friend as well. So thanks so much. Say hello to me in the comments, and I'll catch you in the next episode. Watch the Bitcoin episode, watch the trade spotting episode I'm linking to at the end of this video about the halving, watch, if you want to know more about across the markets, watch the Chainlink and Tezos video, as they're my two favourite altcoins after Ethereum, which may or may not be considered an alt anymore. Catch you later. Thanks so much for tuning in.